we think about real estate markets, please know that they come and go, they ebb and flow, and there's opportunity in every single market, no matter what interest rates are. And there are signs, because interest rates have come down over the last couple of weeks, which is great. You know, they're in that kind of like low 6, mid 6, depending on a million different factors, credit score, all that. So don't quote me on the rate because it changes every day throughout the day. However, rates have trended down. Awesome. But when rates trend down, buyers' ability to negotiate is going to wane. It's going to be limited depending on the house, the market, time on market, the seller conditions, etc. And so historically, when we think about the type of market, we could have a seller's market where they control everything. We can have a neutral market where maybe it's a little bit of both seller control, buyer control, depending on the particular house location, etc. And then we move to a buyer's market. Buyer's market would mean buyers would be in the driving seat. They may have more control. So depending on where you are in the country, you may be in any one of those three markets. But there are some early signs that we in the industry see coming and watch happen in our businesses. And I'm going to cover those for you because as a consumer, somebody that wants to purchase a home, these are things that maybe you're not necessarily in tune with. So here's the scoop. Right now, when we go from a buyer's market heading over to maybe a neutral or a seller's market, this means that sellers are going to be less flexible. What the heck does that mean? It means that closing cost credit that you were needing to negotiate, that may be off the table. It means that any price negotiation that you were wanting to negotiate, that may be off the table. It means that, hey, maybe you were wanting to write a contingent offer on the sale of a home that you have or something else happening in your life, that could be off the table. So it's really important to know that the signs are there, they're starting to come, and we're having conversations right now where these exact things are coming into the conversation and the negotiation with our clients and the real estate agents. Some of the other things that are happening right now is your real estate agent may say, hey, let's see if you get an appraisal waiver on your home loan. Well, what does that really mean? First, it's important to know that this appraisal waiver idea only takes place on conventional conforming loans, which are Fannie Mae and Freddie Mac. So that's first and foremost to know. You're not going to get it on a VA, you're not going to get it on FHA, and you're not going to get it on USDA. All right, now, it doesn't mean you're going to get it. So what happens is the lender is going to submit your information through the automated underwriting system, and that system is going to read the address. And based on comparable cells of that address specifically, together with your loan criteria, credit score, down payment reserves, all the things, then it's going to either tell the lender, hey, yep, we're going to need an appraisal, or hey, the buyer has the option to consider an appraisal waiver. Why is an appraisal waiver important to understand? You may still want an appraisal. Your lender may say, hey, you have an appraisal waiver, you don't need an appraisal. Okay, but that doesn't mean you don't need to get one or that you don't want to get one, and maybe you don't care about having one. It depends. It's such a unique type of scenario that it's not like one size fits all on this appraisal waiver thing. Secondly, when we see the market shift, we start to see sellers want to have the buyer waive their appraisal contingency. So in most contracts across the country, the contract itself is dependent on the house appraising. Kind of makes sense, right? So you're paying, let's say, $500,000 for the house. You want the house to appraise at least $500,000. In that scenario, then your down payment would be based on the $500,000 market value, or the lower of the two. And this is where we start to get into this appraisal, kind of what we call an appraisal gap. And that is, let's say you went under contract for $520,000 and the list price was $500,000. Let's say that the appraisal comes in at $500,000 versus the $520,000. What happens then? Well, the lender is going to lend on the lower of the sales price or the market value. So in this scenario, $500,000. So your down payment, whatever it is going to come off the $500,000 plus you have to make up for the difference between the market value, the appraised value, and the actual sales price. So in this case, it would be, if it was a 20% down payment, 20% of 500,000, 100 grand, plus the 20,000 difference between that market value and the sales price. So $120,000. This is why it's so important that we think about this appraisal waiver strategy. Does it work for you? Does it not work for you? Do you want to have an appraisal? It's okay if you do. But in that scenario, if you're competing and you want that house, this is where having these really in-depth strategic conversations between your lender and the real estate agent, this is the money. And it's so important for you to know that these conversations exist. So The other things I think that are really important to think about is just competition is going to increase. And I've been singing this from the rooftops for the last year. Buyers don't know that they have the competitive edge, even with rates having been where they are, because of the flexibility and the seller's willingness to negotiate. So as this market shifts and interest rates drop, which is going to bring that buyer demand back into the market, my fear is that we now put back into the seller's hands all of the control. They're going to drive the decision. And what does this mean for buyers? It means that buyers that are putting no money down, using down payment assistance, doing low money down, their offers may not necessarily be as competitive if there's another offer on that same house with somebody that's putting 20% down or 50% down or paying cash. I mean, all of these scenarios really do impact a buyer's ability to compete depending on the type of market. So hopefully that's helpful to you. You guys comment and share if you know anybody that's thinking about buying a house and they're just kind of like confused. And I get it. I mean, the media is insane right now. Social media is insane right now. Like, you're going to hear all kinds of things. Forward this video. If you need specific conversations, 480-725-0150, please reach out to us, and a Kelly Zitlow Group mortgage advisor will be happy to walk you through your particular strategy.